We're going back now to the subject of stocking your scalp, and I realize that we've jumped around a little bit from larger time frames to smaller time frames, but the idea is so that you get the feel for the fact that regardless of whether you're scalping or whether you're trading intraday, it's important to get into the habit of constantly scanning through the various time frames and the various charts to look for where the levels of support and resistance and key levels are resting and developing, because you'll start a day and there will be certain areas where, as trading begins, levels of support and resistance will develop intraday which previously did not exist. And those can often be very, very important levels that will offer trades as the day progresses. Now, stocking your scalp, begin your day with a top-down analysis and define your key levels on the weekly, daily, 4-hour, 1-hour time frames beginning with the previous day's highs and lows. As you know, you're going to start with actually the smaller time frames, the 5 and the 15, and just have a quick look at those before moving to the higher time frames. When volatility begins to increase, watch for a bounce at a reaction level. If a strong intraday move ensues, the market is likely to bounce at your reaction levels and offer a short trade. And again, as a strong intraday move ensues, that means hopefully the market is moving away from your central pivot point and maybe towards a Fibonacci retracement level or a daily high or low or level of resistance and support. Looking here at the weekly chart, this is a British pound weekly chart, and just to give you an idea, again, to stock your scalping trades. For example, you see this high right here, which converges with the 38% retracement of this upswing. The market has a very high probability of bouncing at least 10 pips at this level. It is a key level of resistance here, and should price make it down to that level, very high probability of a trade there, which could even not only be a scalp, but even a medium to longer term trade. And again, at the 50, which is at this high right here, this is a Euro daily chart, and price is currently here. Watch the lows, watch the previous day's low right here, extend it forward, that can be a key level. 38% retracement. If it penetrates the lows and starts moving lower, then of course you're going to want to watch these lows as well as the 50 retracement and this 127% extension level here. Here's a little closer view of a 60-minute chart. The first place that I'd look for a trade here is at these lows, as the market has been ranging. So these lows right here, if the low is penetrated, I would look at this low right here for an area to bounce. Alternatively, if price is to retrace, which I would be more inclined to suspect that the market will retrace, and if it retraces, you see this high to this low, this is a 38% retracement level which converges with these lows right here, as well as your first resistance level. So I'm sorry, it's a first level of support, and your pivot point is up here. So first of all, this low, if it comes down here, buy it. If it rallies here, sell it. Alternatively, if it moves below this low, buy it down here. What I'm saying to you here is that you want to be prepared on your 1-hour chart before you scale down to your smaller time frames to look for your trades.